Relaxing. Didn't do much. Good morning, everyone. Hope everyone is doing well. Happy Monday. Hope you all had a great weekend, and we're back here with a Monday morning market prep session. It's good to be back talking with some of the guys on YouTube and involving the TPA family in this. Obviously, you guys get newsletters and whatnot, but I feel like breaking some of this down to start the week off would be a nice little start. So, morning, Joseph. Morning, everyone else is joining us. Last week, let's talk about last week a little. Obviously, there's a lot of news here that we can cover for this week. We have Forex Factory here up on the screen. You guys can go and check that out. Forex Factory. They got a great news calendar. They break down all the high-level news, right, that you want throughout the week, throughout everywhere, right, globally. You can break it down only for US and whatnot. But last week we continue with the summer markets, right? This week I don't really expect too much of a difference. We'll look at some of the news that might influence that. But last week we had the earnings kickoff, right? The earnings period kickoff during the summer movement. Summer movement typically is low volume, right? Low volatility. There are moves throughout here and there. We ended last week off with MOPEX, the monthly OPEX, that kind of put a little thorn in the side of the market's recent all-time high movement. We'll talk about what's going on here on the overnight, but last week we had a decent amount of earnings that came out, mainly with banks, right? Banks did fairly well. To end the week, American Express had a pretty good earnings report, but the stock didn't necessarily hold up too well. And the highlight of last week, right, other than tariffs, were mainly the back and forth, the 40-minute window, I should say, with Trump and the White House officials talking about Powell, right? And it ended with, you know what, there's not going to be any action taken. So Powell was under the knife last week. They wanted to fire him. Nothing really came of it just yet, but the market did react a little adversely before finding buyers and continuing the momentum to the upside. Now, this week, one of the big factors of the week is going to be earnings, right? About, I think, more than 20% of the stocks on the S&P 500 are going to report Q2 earnings this week. Last week, like I said, we had mainly banks, so JP Morgan, all the banks did fairly okay, but this week, the main players are going to be Alphabet and Tesla, right, that come out on Wednesday. So Google recently has been pulling down, or I shouldn't say pulling down. I should say that it hasn't necessarily been as active to the upside as a lot of these other Mag 7 names, along with Apple. And Tesla most recently, right, Tesla has been moving in respect to Elon's recent public announcements of his idea of politics, right? They didn't really like that, but in recent days and recent weeks, Tesla has tried to revive itself from those 300s and now is trying to push back up. So those are going to be the main two pieces of information or earnings events that come out this week. We also have Domino's, Chipotle, along with defense companies Lockheed Martin and Raytheon. On Tuesday, we have General Dynamics on Wednesday, and a lot of investors on Tuesday are going to be watching if Coca-Cola is actually switching from corn syrup to cane sugar for its U.S. products. Now, in tariff news, right, we're coming closer and closer to that, I guess, extended deadline day. But Trump is heading to Scotland on Friday, right? During his trip across the pond, he's expected to meet with the UK PM, Keir Starmer, to refine the trade network struck between the two countries in May. So this is in accordance to whatever the White House has said. Trump is also going to visit 2 of his family-owned golf courses, plus the site of another future course. Though it's unclear whether Trump will hit the links himself, but either way, he's going to be back in the UK in September for a state visit. But most importantly, let's see how some of these trade deadline or headlines shape up. So that's going to be a big component along with earnings. Everyone's going to have their eyes on earnings, especially with big tech earnings coming out, starting off with Google and Tesla this week. Mag 7 has been a huge component of the recent upside in the market, specifically around semis and AI like NVIDIA. Microsoft has done extremely well since its last earnings report. However, the recent cyber attacks have seen a little more downside. It's kind of gapping a little down pre-market today. As you can see, the other Mag 7s are pretty much gapping up or pretty much flat from Friday's close. So in terms of some of the other news that we've got going on, you can see here, this is straight from Forex Factory. Surprise, surprise, Fed Chair Powell is expected to speak tomorrow. You can see the details when you highlight this little folder here. I don't think it's going to be necessarily anything too crazy, right? Due to deliver opening remarks at the integrated review of the Capital Framework for Large Banks conference hosted by the Federal Reserve in Washington, D.C. This is just, how long now? The next Fed rate decision and event is coming out on the 30th, so next week. So just a week before we have that Fed rate decision that comes out. And he's on the chopping block, right? Powell's not too happy, and his potential replacement, I believe it was Waller, last week said that doesn't mind 2 rate cuts coming up. So we'll see how things shape up, but they're not too happy. Currently, the U.S. rates are among the highest in the world, actually. In terms of other news out of the U.S. this week, we got some flash manufacturing PMI, flash services PMI all the way on Thursday, and then some of these orange folders. So the red folders are mainly the higher impact ones. The orange folder are kind of medium. We also have Richmond Manufacturing Index tomorrow. Nothing really today. And we could have another quieter week until we get towards the midpoint of the week when those larger earnings are expected. So, like we said, he's going to be talking about, Jay Powell's going to be talking about some of the banking remarks this week. And then in terms of other news, there's not really too much to take a look at today other than breaking down what has been going on with these markets. So the way I see it, right, we're going to take a look at this S&P 500 first, and then we'll take a look at NASDAQ as well. Big tech in the driver's seat, as long as big tech continues, and I think that there is potential for big tech to continue that upside momentum that's currently holding out. I think there are a lot of laggards that need some catching up to do, and we'll find some of that upside momentum with these potential earnings reports. Now, one of the big things is with big tech is that their valuations are a little overextended, as they've pretty much always been. Everyone's concerned about valuation metrics. Oh, valuations in big tech. Too overextended. The earnings have to do extremely well in relation to the actual valuations to kind of, the word's slipping out of my mind. To really justify these current prices. So there's a lot of weight on the current earnings for big tech, and I think that there's high expectations. Overall, the market is still prompting up with good expectations for big tech, so it seems like everything is trying to hold things out. Like I said in our recent newsletters, we've seen some of the fastest inflows in tech since 2009, according to a Bank of America survey. A massive drastic shift with over 14% net overweight in tech, flipping from underweight just a month ago. There have been massive inflows over the first quarter, and especially during the current second quarter. The first half of the year has seen some extensive inflows in tech, and we can see that FactSet has estimated Q2 growth, earnings per share growth at 9.3%, with a forward PE at 22.2x, which is in line with expectations. It's growth, right? With earnings growth, that subjects the market to general upside momentum as well. So let's take a breakdown in terms of what we got going on with these equity markets. I wanted to open up the delta profile for each of these as well. Give us a little more of a breakdown of what's going on. What I've done actually is I've combined last week's delta profile here on the S&P, so we can see how last week's overall delta had shaped up, right, to give us a little clear image. We also have the current overnight session. So why don't we dive into this? The S&P over the last 2 weeks here has been a little interesting because it hasn't necessarily shown as much upside as the NASDAQ. What I mean by that is once we've exited this balance, right, this is a major balance. One of the main things that I like to do is understand where these major balances are, especially as we're moving into new all-time highs here. Morning, everyone. I wanted to make sure, actually. Oh no, I think everything's good. Sorry, just got a little distracted. One of the main things that I want to do as we move into all-time highs over here is make sure that we understand where the developing balances are. This is obviously a 400-day profile, something that I use, but as we move into all-time highs, it becomes a little trickier to understand from an auction perspective where major balances are. That's where these individual days come into play, and once they keep stacking up and they create their individual balances, their developing balances, we get more of an idea. Now, one of the best things that happens for an all-time high to continue its momentum movement after a burst higher is to create a new balance into this high, telling us that fair value is actually somewhere around the top of the distribution realistically. So if fair value is somewhere around the top of the distribution, and when we make a new all-time high, the markets start to rotate to create new balances, this suggests that the upside momentum is still there, and we do want to see that continuation. It's just a matter of where that continuation is going to pull back for the heavier buy side to step in. Now, the main thing here with the S&P 500 is dragged on a little bit, so I do want to understand where these major balances are. First things first, right? We had a very important level at 62.60 over the last to 65 over the last few weeks. This day over here last week was the Fed Chair Powell potential firing, realistically, and we got this head fake back within this distribution that didn't last long as the buyers stepped right back in, and things were all good for the upside swing. From there, we made new all-time highs into the end of the week on Thursday. With that, what we've done is developed a new distribution area into the high. So things to watch out for, right? We can take a look at how the weekly profile sets up, but currently these are the balances, right? These are very important balance areas. We got this area right here, right? We've long since moved away from that. We've got this area that has been developing for a while right now, somewhere around here. And then we've got the developing balance, right? Maybe somewhere like this. Everything above this is kind of, wait and see. So over the last few days, here, let me sneeze. Excuse me. Whoa, sorry. Over the last few days here, from last week, we've escaped and we've continued the upside momentum. The weekly distribution has created some heavier balancing over here like this, and currently like this, split into two. So Friday, we had this B-shaped profile. Yesterday on the overnight, we completed it, and right now we're kind of just creating similar highs. So what does this leave us with? What does this tell us? Last week's major balances dropped down all the way into this 25. The current developing balance bottom is probably somewhere around that 25. The current major balance that has been developed over the last few weeks is 63.10. What that suggests is 63.10 has created a very, very strong support structure over the last few days here to hold out any larger pullbacks to continue prices. Because one of the worst things that could happen realistically, in my opinion, for this buy side to continue is that we get this pull down all the way back down into this 62.60, because this is a huge distribution top, auction top, that it's served its purpose. It's held up long enough, and right now we want to see some higher lows being created in prices. And with the developing balances at incremental higher prices, the expectations for prices to want to hold those areas to continue that upside momentum. So currently, as things stand, we have this minor area, is very, very tight, but it's at 63.40 right to 37. It's a minor area that's been developed from last week, and you can see the current overnight session over here with a low volume drop off right where Friday's B was. That marks off this about 37.40 distribution area to try to hold prices out. You start slipping under that, you have an area at 25, but realistically, 63.10 is the major point for this week to find some of that buy-side momentum to continue to hold prices here on this S&P, right? You could have a little bit of sell-side into it. That happens under this area, I would assume, and then we can target the 25, we can target the 10. But generally speaking, if we do see that 10 this week, the expectations are for the buyers to try to hold that out. Now, from an order flow perspective, we can bring in a lot of the information from last week. We can see where the heaviness of absorption of this negative delta came in to start things off, which is a high 30. That was a very poorly drawn line, by the way. But the high 30, you start losing that high 30, you start getting priced into that 25 that are expected to hold support. But the main area that sticks out is a massive buyer in and around that 12, right, and then down into this area. So realistically, between 05 and let's say 12 is the major holding point of even order flow that wants to sustain the current upside momentum on the S&P 500 futures. So as I look at this, right, I wouldn't be surprised to see a bit more weakness to start the week, but generally I would like to see those massive areas hold on the buy side to continue the momentum. Now, a lot of these things are subject to potential earnings that come out on Wednesday, right? Something that we have to take into consideration. So it's the same thing here with the NASDAQ. NASDAQ has developing distributions as well. It's got maybe a few more really heavy drop-off areas that we do want to consider, but I do still like the upside momentum with these developing balances to the upside. My only problem with that is, like I said, we might see a little more of that downside momentum before those guys step in. Sorry, I gotta keep moving this thing because it's in the way. So this is the, again, weekly delta profile, but first driving into this, right, we've had this major distribution here, 23,055 top on NASDAQ. We've recently broken it. Thursday, one of the biggest things that I noticed was this massive unfinished auction. Very, very weak volume that starts off at this volume drop-off. 23,240 is going to be a major area. You can see the failures currently into the highs around 320-ish, right? But this is a major concern because there is a potential for this thing to get cleaned up all the way down into the distribution top before prices kind of settle down. You have this minor area over here that drops off from last week as well, right? 23,180. But the main figure, right now is going to be at 23,120, 100. This monstrous buyer that came out Thursday as prices continue to the upside swing. So this is an extremely important area for the NASDAQ, right, to kind of hold out with those massive buyers that came out on Thursday for this trend day to kind of hold against the completion of this auction. So under this 240, I could expect a little slip up again, maybe 180, 120, 100, before that big buyer tries to set in and continue this upside. You have a lot of buyers that are trapped into these highs that have continuously failed on the current overnight session as well. So some immediate little downside before buyers come in at lower prices. It kind of starts to make sense for me on this NASDAQ. So I hope I've given you enough for the weekly market prep. It was good to be back on YouTube, and now we'll be opening up our trading room. I'll see you guys in there. And remember to check out community.tradeproacademy.com. We'll be doing these more often. We'll be doing some other lives as well. I'll see you guys on Friday on YouTube, and we'll chat soon. So trading room, a little bit of a schedule change, but let's get back to it. I hope you guys have a great start